guys, it's Stock Curry, and today I'm going to have an update for you on some market news. I also have an update for you on my option play, which, as you probably are aware, did not work out. And I've also got an update for you on AMC. So let's get into it! Okay, there were two bits of pretty important market news that came out today. The first one was the unemployment numbers, and they came in about 10% higher than expected, which is not a good thing, especially when we're supposed to be recovering here in the United States. So that could cause some problems for the economy down the road. The other bit of bad news that came out was out of China, where the Chinese government basically came out and said that they were not going to bail out Evergrande, or Evergrande, or however it's said. So the issue there is that could end up having an effect on foreign investors as well as the banking system, and possibly down the road, 6 months to a year down the road, it could also affect the U.S. economy through the housing markets and our financial systems as well. So two bits of bad news, but nothing urgent or critical, but they are things to watch down the road. Now, the other thing that I found kind of interesting is that even though the Fed said that they were going to start tapering, we didn't exactly give a timeline for that. We saw the markets go up. Well, really, they traded flat yesterday, which we talked about. But now on Thursday, they went up a lot. They were up about 1.3, 1.5%. And that's a pretty significant increase in the markets, especially when I had a bet that they were going to go down. So, of course, I lost a lot of money on the put options today. Oh well, can't win them all. All I have to say is on days like today, I grab a notebook and I grab a pen and I grab my trading journal and I open up my trading journal and I write down some lessons learned. So one thing I did is I went back and I looked at specifically the SPY, which is an S&P 500 ETF, and I looked at the last 6 months, and I found a pattern where in the last 6 months, every single time, well, not every time, there's one exception, but with the one exception, every single time the S&P, the SPY, the 1 hour became overbought, that is the RSI was above 70 on the 1 hour chart. In all but one of those situations, the market traded flat for the rest of the day. It traded flat the following day. And then most of the time, it dropped on the next 2 days. And so I found that we have a 95% chance of the market trading flat on Thursday and the market trading flat on Friday. Now, that is not good for options, period. Call options or put options, because both of those are going to lose value to both theta as well as vega, which is implied volatility. And so based upon that, I decided to close out of all the options because there's no point in holding them on a market that trades flat. And so I did lose money on the put options. Now, I'm not going to reopen those on Friday because I think we're going to have a flat day, at least not during the day. Now, if we get a flat day on Friday, then that means that the pattern that has occurred every single time except for once in the last 6 months is holding up once again. And if that pattern holds up, then we got to look at what happens Monday and Tuesday. Now, about 65% of the time, the markets will go down the following 2 days, which in this case is Monday and Tuesday. So once again, we have a 65% chance of the markets going down. Now, looking at probability and statistics, I will tell you that I will take a bet on a 65% outcome every single time. And over enough times, if you had an unlimited amount of money and an unlimited amount of tries, you would make money 65% of the time. Of course, the problem is we don't have an unlimited amount of money and we don't have an unlimited amount of tries because eventually we'll run out of money. And probability says you could get that 35% outcome 10, 15 times in a row before that 65% outcome occurs. And it's the old saying, right? The markets can stay irrational longer than you can stay solvent. And so there's a big risk here, obviously. I've got a 65% chance of this play working out, but I'm willing to take that. So towards the close on Friday, if we get a flat day on Friday, I'm going to be buying put options towards the close in anticipation of that 65% chance of a down day on Monday and Tuesday. Now, being that options are options and they really play off volatility, If Monday is a major red day, I'm going to sell on Monday. If Monday is a little bit of red day, I'll go ahead and sell on Tuesday. And of course, if Monday is green, I'll sell on Monday as well, because that means we're in that 35% chance again. I'm going to go a little bit longer out this time, just in case Monday is green. I don't want to, lose all the money from doing, a day option or something like that. So I'll be doing at least a week option. I may do the quarterlies. We'll see. But I'm going to be giving myself at least 5 days on those options, just in case Monday is green. I don't want to lose all the money, 75% loss like I did today. Okay. All of that said, I know you guys are really curious about AMC. I think you're really going to like what I have to say. So let's get into the stock picks portion of the video. For those of you guys who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks on YouTube. Every single day, I watch hours and hours and hours of YouTube videos, and then I consolidate all the stock picks and I put them together into a single video. I give you both the cliff notes on what people said, as well as my analysis on their stock picks. Now, if anything I talk about today piques your interest, make sure you listen to who I say talked about that stock, and then go watch their video to get the full details on what they said. Now, all I ask for putting all of this together for you guys is that you hit that like button, subscribe, click the bell icon, and click all so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. Alright, before we get into our stock picks, I just want to remind everyone that I am not a financial advisor. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. Please do your own research before investing in any asset. If you're wondering what you're looking at right now, this is the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. Alright, let's get into today's stock picks. And first up is AMC. This is AMC Movie Theaters. Keen and Grace let us know about a milestone that was reached at AMC on Thursday. It is estimated that short sellers have now lost $4 billion on AMC since the beginning of this year. So congratulations to all of the apes who have been holding AMC and not selling. Now, regarding short squeeze stocks in general, a number of YouTubers have mentioned something called negative beta. Negative beta is where a stock price moves inverse to the market. If the market experiences a significant correction, that could trigger a lot of short squeeze stocks to squeeze. The reason is because most hedge funds open offsetting positions, meaning they'll go long on one position and then short on another comparable position in a different security. If the market has a major correction, then the value of the long position will drop to a point where hedge funds will need to start selling shares in order to cover their losses. When they do that, they will also need to cover some of their short positions in order to maintain their delta neutral position. And if enough hedge funds cover their short positions, that could trigger a short squeeze. And that's why a lot of stocks that are heavily shorted will actually go up during a market correction. This is also the reason why I think a lot of high growth stocks will actually go up during a market correction. It's because a lot of high growth stocks are heavily shorted, and shorts will be covering their positions to maintain their delta neutral stance on their long positions that they are losing money on. Next up is CRWD. This is CrowdStrike. This is a cybersecurity company used by banks and other large companies to help cybersecurity professionals manage threats. Keen and Grace talked about how the COO exercised some of his stock options on CRWD. When you see insiders buy or sell, you have to consider whether the buy or sell was based upon pay or information. In this case, it was just based upon pay. The easiest way to know if a buy or sell was based upon pay or information is to check tip ranks. On tip ranks, on the Insiders tab, you can see which transactions were based upon pay, that is, uninformative buy or sell, and which transactions were based upon information, that is, an informative buy or sell. So tip ranks makes it very easy to filter out all of the pay structure noise and see just the informative buys and sells. And on this chart here, we can see that most of the insider transactions were sells, which TipRanks has labeled as very negative. Keenan Grace still likes the company though, because they consistently beat earnings expectations. Keenan Grace thinks it would be a good idea to wait for another dip down to the 100-day EMA before buying in. I will tell you that technically CRWD is slightly bullish. The RSI is neutral, but the MACD is turning bullish, and the candles are already bullish. So you might have to wait a little while before CRWD drops back down again. And next up is NIO. This is NIO, and they're a Chinese EV manufacturer. StockMo said he thinks the FUD from China is settling down a little. We can see how NIO bounced off of the support line at $35. NIO is now starting to turn bullish, but we don't have full confirmation of a rebound yet. Now would be a good time to buy into NIO if you don't mind a little bit more risk. If you're more risk adverse, you might want to wait for a confirmation of a rebound with the candles closing above the 10-day EMA. Keenan Grace recommends buying NIO in the $34 range. You had a chance to do that a few days ago. I don't know if you'll get another chance or not. Personally, I don't really see NIO dropping below $35 again, but a severe market correction could cause it to drop back down. The average analyst one-year price target is $67.52, which represents an 87.5% upside from Thursday's closing price. I also want to point out that the lowest price target is $62, which represents a 72% upside. Alright, I hope you enjoyed this video and get a lot out of it. Comment down below what your favorite stock pick is. And if you're looking for a broker to trade with, you can sign up for Webull using my link in the description below. When you sign up for Webull using my link in the description below and deposit just $100, Webull's going to send you 2 free stocks worth up to $2,300. Now, if you're not a U.S. resident or if you're looking to trade OTC penny stocks, then you can sign up for Interactive Brokers. Interactive Brokers is a great trading platform. They have highly discounted trading throughout the world. And both Webull and Interactive Brokers offer the full pre-market and after-hours trading from 4 a.m. until 8 p.m. Eastern Time. Now, finally, I want to remind you guys to hit that like button, subscribe, and click the bell icon if you haven't already. I hope you have a lot of success trading, and I will see you on Monday.